If you want to make profits consistently when you're trading boom and crash, especially if you're trading ticks, then this is the best strategy that you can ever ask for. And I'm just going to be sharing with you just in a minute. Let me just first show you how you can set up these indicators, right? So it's just two moving averages on the main chart and the RSI and the moving average on the indicator window, right? So for the moving averages, two moving averages on the main chart, I've got the 200 moving average, right? Let me just show you, right? So I've got the 200 moving average, right? Exponential apply to close. Then color I choose, it's orchid, but I just like, it's just paper for me. There are many shades of paper. I couldn't find paper. I don't have the time to look for paper, but I think it's this one. Medium orchid again, or whatever. But I just like using paper, right? Then I click OK. I don't know why I like using paper. Maybe it's royal or whatever. But then for the second moving average that I like to use is the 50 moving average, right? So it's the 50. It's the black one on my chart, exponential and apply to close again, right? And then for the indicator window right over here, I'm using the RSI, right? So right over here, I'm using the RSI of period 21. I like using period of 21. Most people use 14, but it's just too fast for me. As in, it reacts too quickly. Is to just be the same as a stochastic. But as we are trading boom and crash, it's better for us to use an RSI that's a little bit slower. That's for my own opinion, right? But if you want to use 14, if you're used to using 14, you can just use 14, right? That's what you're used to, right? And then apply to close, and then it's the blue one on my chart. I made it a little bit thicker than what I actually use it so that it will be clearer for the sake of this video, but I just like using 1 pixel when I'm using this on my own. And you can also set this up on your phone, right? Then I click OK. Then for the moving average over here is moving average period of 7, right? The method is simple now, and apply to previous indicator data. You want to apply it to the RSI, the data that's obtained from the RSI, so that it follows what the RSI, right? So that we can get our crossovers, right? Then you click OK. And if you don't know how to add the moving average on your indicator window, right, you can just click view over here, then click what, navigator, right? When you click navigator, right, so if you want to add what, a moving average, just find where it says moving average. Okay, right over here, right, you click it and you drag it on top of your indicator window. So you first have to insert your RSI, right? So right now I've already inserted what, my moving average, right? But so I'm just going to click what, cancel, right? Because I've already inserted it, right? Let me just remove this so that our charts can be bigger, so that we can see them more clearly, right? So what do you have to look for over here, right? So firstly, you have to look for the trend, right? So if you want to look for the trend, you can go to our 15-minute time frame or 1 hour time frame, right, and check what the market is doing. But since we are using moving averages, this checking the trend can be quite simple, right? For us to know the trend, we just have to follow where the moving averages are pointing, right? So if the moving averages are on top of the candlesticks, it shows that the market is going down, right? And if the moving averages are below the what? If the moving averages are below the candlesticks, it shows that we are going up, as in this example over here, right? So that's how you can simply use these strategies. Use this for checking our trend, right? Then for your entries, you can enter using the 15-minute time frame or the 5-minute time frame. Those are my personal favorites. Why? Because you'll be able to hold that trade for a little while, right? But the 5-minute time frame is the best. That's what I like using most, because I get more entries, right? For example, all this I could have entered when I'm using the 5-minute time frame, but over here I'm not using the 5-minute time frame. Is the 15 is the 15-minute time frame, right? So that's what we have to look for on the trend, right? So after we've done confirming our trend, so you can use this strategy for both catching spikes and for trading ticks. But when you are trading ticks, that's when you'll be able to use this indicator window over here. When you're catching spikes, it's just better to just stick with the moving averages alone, right? So let's show you how to use this strategy, right? So right over here, we've done confirming our trend. Let me just shift to the 5-minute time frame so that we can get more examples. Yeah, let me shift to the 5-minute time frame, right? So over here, after checking our trend, right, so our moving average is crossed for a downtrend over here, right? So how do we enter, right? I'm not going to be going much into depth about the RSI, but if you want to go check more information than what I'm going to be sharing in this video, you can check out the link that I'm going to leave in the description box. And if I forget to leave that link, please remind me in the comment section, because sometimes I forget to link the video, right? So right over here, how do you get our entries, right? So we've already confirmed our trend, right? So right over, we wait for a pullback, right? So our pullback wanted to reach the 50 moving average or the 200 moving average. But as for me, right, the best setups usually come to the 50 moving average, right? And just to make things simpler and uniform, I prefer if you just stick to using the 50 moving average for your entries. The 200 moving average, it's a little bit complex, but if you want me to post more about how we use the 200 moving average with the RSI, just comment in the comment section below, but I'm going to explain a little bit in this video, right? So right over here, right, after confirming out our trend, right, and checking what, waiting for a pullback, and it's also in a consolidating manner, is one of the best setups, right? But I'm not going much in depth about that also, right? So over here we come to our indicator window, right? So our indicator window, as you can see, the levels, right? So oh shit, I forgot to tell you about the levels, right? So the levels for our RSI is period 21. Then for the levels, I want you to copy these levels as they are. I'm sorry I forgot to mention this earlier, but I want you to copy these levels exactly as they are in the description. So the level 40 is still buy, level 50 is equilibrium, and level 60 is still sell, right? So if the market doesn't break the 40 level, we are still considering it as an uptrend, right? And if the market doesn't break the 60 level, if it just keeps respecting the 60 level, we are considering that a downtrend. And that's why I don't like the overbought and oversold levels, right? I'm not going much into depth about that, but so just know that these are the levels that we are going to be using, right? So click OK, right? So in this example over here, right, as you can see, like what it did over here, when the market is in a downtrend, right? So when it pulls back, right, over here, right, and it reaches over here at the level 60, it crosses over and continues going down, right? So if it doesn't break this level over here, right, if it doesn't break and continue going a little bit up, right, we still consider this a downtrend, right? So we are still in our downtrend, right? So for our entries, the 50 moving up, sorry, the 50 level on the here where it says equilibrium, it just means that we can use it for both our buys or our sales. It has got no side. It's in the middle, right? It's indecisive, right? So it's not like our doji candle, right? So right over here, when the market pulls back right over here to the 50 moving average, we are going to be entering when this red crosses over the blue line, right? So when the moving average crosses over the RSI, that's when we're going to be entering. And as you can see, we hold that trade, and our first check profit, of course, will be so like somewhere over here. But yeah, of course, you can check the further references, and you've got your own target profits, right? But most of the times you can get at least about five-minute candles, right? So it's about 25 minutes, 30 minutes holding that trade, right? And when it pulls back to the 200 moving average, so when it pulls back to the 50 moving average, most of the times, right, it will be around the 50 level on the what, on the RSI level over here, right? And when it pulls back to the 200 moving average, most of the times it will be around the level 60, right? So, and the moving averages, remember guys, we don't have to treat them as just a strict level, right? You can come and pass it a little bit like what it did over here. It breaks it a little bit, but it's still in that zone, it's still in that area. Right over here, it respected first leg. Then for the second leg, this is so like an M formation, right? Then for the second leg, it's so like breaks, right? But it didn't break, right? So over here, we're going to be entering over here, right? When it breaks here, I'm going to teach you more on the 200 moving average if you want. But so for the moving average, okay, let me just preempt you a little bit, right? If it pulls back to the 50 moving average, it usually just forms one leg. But when it pulls back to the 200 moving average, we are only going to be entering if it forms our M, right? That's that's the exception for us to enter on the 200 moving average. As you can see, when it pulls back to the 50 moving average, most of the times it just gives us one leg, over here, right? And we're just going to be entering there. And when it pulls back to the 50 level, you can see it's also on the level 50 over here, level 50 over there. So we are taking our entries over here when it crosses, right? And when it crosses over there, so it's very simple, guys. And if you know more about candlesticks, you can even get earlier entries before the RSI crosses over, right? So right over here, we enter again over here, right? It's around the 50 level and respects the 60 level over here. So we enter again, it respects the 60 level over here. Though it broke a little bit past, it is still respected the 60 level, right? And over here, it breaks past the 60 level finally after a long struggle, right? And as you can see, after breaking the 60 level, when it pulls back to the level 40, it continues going up. Now it's in an uptrend, right? So now it's respecting the level 40 because it's now in an uptrend, right? So That's what you just have to look for, and it goes back again to the downtrend when it breaks past these levels. As you can see, right over here is level 29, level 30, right over here. That's why I say the overbought levels and the oversold levels don't work, because level 30 is supposed to be oversold, and check this, it's oversold from this point over here, and it keeps on selling. Imagine if you are holding that trade in anticipating that it will spike up, right? So the oversold and the overbought levels don't work. That's why I don't like using the 14 moving average. It's too fast, right? That's it for what we are looking for right over here. It gives us a pullback respect to level 40, right? So if you've got any questions, leave them in the comment section down below and I'll address them. And if you like this video, like, subscribe and share.